All right, Michael Saylor has a lot of Bitcoin as a part of his company, Microstrategy. They have a lot of money that they've taken out as a loan to buy a lot of Bitcoin, and they're sitting on about $1 billion of a paper loss right now on Bitcoin because the price has collapsed. Their average is around 42,000, and the price now is at 21,000. So let's get into this video. What's his name? Michael Saylor just did a video about it. Let's get into it right now on CNBC. I'm going to be analyzing it. I watched it and I was like, these reasons aren't that amazing, but we'll talk about it and let me know your thoughts in the comments. This is what Michael Saylor has to say about their potential margin call on Bitcoin and their big loss that they're sitting on right now.
Well, nice to have you with us.
Yeah, thanks for having me.
Always. Listen, love to just start off on, we just said it, I think it's 129,000 roughly, coin, average price of 30,700, spent about $4 billion on it. One would anticipate if the price stays where it is, that's going to cause a significant write-down overall. At least your auditors may ask for that. You know, you've talked for years about the financial flexibility owning all that Bitcoin gives you. I wonder if you believe it also works in reverse.
No, I think it's been a net positive. We back-tested our strategy against every other alternative. And if you roll the clock back to August 10th of 2020 when we embarked on this journey, Bitcoin's performed 10x better than anything else. Gold's down 10%, NASDAQ is flat, Bitcoin is up 86% since that time. Over any time frame, 2 years, 4 years, 8 years, Bitcoin's the best performing asset. I can't come up with a better idea.
So overall, he says, like, look, I don't think we made a mistake. We picked an asset that has the best returns. The question is, are the future returns going to be as monumental as the past returns have been for Bitcoin over the past 2 years? A lot of people have said, well, the Fed pumped $7 trillion of liquidity into the markets. That's the only reason why Bitcoin mooned while every other stock was mooning, and now it's time for it to come down. So that may be sort of the flaw in his logic, which is that in a market that doesn't have the Fed artificially pumping it up, maybe Bitcoin doesn't perform that well. But if you're looking at past performance as an indicator of why you should buy it, then it's probably a good buy.
You can't come up with a better idea. Does that mean that you would actually consider buying more at these prices?
Yeah, I think if you think about Bitcoin, if your time horizon is 1 month, it looks like a volatile risk asset. But if your time horizon is 10 years, it looks like a risk-off store of value asset. So the crossover point is 4 years. Nobody's ever lost money investing in Bitcoin for 4 years. And if you want a surrogate for the book value of the Bitcoin network, it would be the 4-year simple moving average. The simple moving average of Bitcoin over 4 years is about $21,685. Bitcoin's only touched that point a couple of times in its history, and those have always been great buying opportunities. Right, this is
right.
Bitcoin's on sale.
We're touching that.
So he's sticking to that logic, right? He's like, well, yeah. I mean, and kind of honestly, that's what he has to say. If you've bought this much Bitcoin and you're down on it that much, it's like, it's really, your answer is obviously full of bias. But nonetheless, if it's, I mean, this is the same thing I would say with Palantir. I'm like, yeah, it's a good buy right now. I was buying it at 23. So I mean, like, at this point, he has no other choice but to say to buy Bitcoin. It's just the question of, you know, can you really trust the guy who's this down on the asset?
We're touching that price right now. It's funny you should mention it. So is it a great buying opportunity?
Absolutely. Bitcoin's backed by the most powerful secure computer network in the world. If I gave you $100 billion, you can't reproduce it. And it's beyond a nation state attack or corporate attack. So once you understand that and the fact that it's a singularity, there's nothing like it in the world, then yeah, this is an ideal entry point to get into this thing.
All right, but you've also taken on debt in order to actually accrue that position, which does incur a certain amount of risk, doesn't it? I mean, I know, you know, you've got, 6 and a 1.25 senior notes. They're, 2028. You've also got maturities that are out there, but there's concern in the market about margin calls, about collateral calls, certainly on some of this debt. Can you clarify for us exactly what those are under the covenants that you currently have and how they may impede your financial flexibility?
So here they're asking very deeply about very specifically, like, are you going to get margin called and what's the truth on this?
Yeah, sure. On a multi-billion-dollar balance sheet, we've only got a $200 million loan that we have to collateralize, and we're 10x over collateralized on that right now. If the market traded down by a factor of 10, we've got cash and we generate cash flow. So this has all been, the margin call thing has much ado about nothing. It's just made me Twitter famous, so I appreciate that. And the Twitter trolls love to beat up on me because it gets them engagement.
This I agree with him. I mean, to be honest, a lot of people love to beat up. I mean, it's if you do something that most people could be like, oh, you're screwed, which is like if you're down $1 billion, you're screwed. You're going to get the Twitter trolls coming after you, and it does get you a lot of engagement. It does get you a lot of followers. The question then becomes, can you work yourselves out of it? So his argument is like, there is no margin call at 21,000. That's like some number that people came up with, so it's not true.
As for the company's balance sheet strategy in general, we borrowed $2.2 billion at a blended interest rate of 1.8% before interest rates doubled. Junk bond indexes from 426 basis points to 820 basis points. Mortgage rates have doubled. If you had a chance to grab $2 billion at 1.5% interest, it seems like a reasonable thing to do, and I'm glad we did it.
That's a very good point, man. So one of the things people don't recognize is they borrowed a lot of money. 2.2 billion is a lot, but they borrowed it at a 1.8% interest. I mean, $2 billion at 1.8%, not even 2% interest. Like, yeah, you're gonna that's a deal, especially if you're a company that has free cash flows and you're building and you're working and you have some more growth dynamics built in. You can pay that back off very easily, and that the amount that you can do with that money is a lot. To make more money, especially when you have to pay back only 1% on top of it.
Most of it is unsecured debt. 1.7 billion of it is unsecured. The 500 million comes due in 7 years after we borrowed the money. So we feel like we have a fortress balance sheet. We're comfortable, and the margin loan is well managed.
Shepard Smith here.
I know you guys definitely have to say it every time you see him, right? Well, so that's what Michael Saylor said. Now, a couple thoughts I have on this. Number one, it's going to be interesting to see what happens to Bitcoin. Let's pull up the chart of Bitcoin real quick, and let's see what's going on right here. Bitcoin has been steady today. 21,296. It was about 21,600. So, I mean, like, it's staying in the 21,000s. Last night, it got to 20,073, which means it was $73 away from hitting the 19,000s, which is crazy from a psychological perspective for Bitcoin to go from 20K or in the 20s to the teens. I mean, you start thinking a little bit more about what's going on, right? And the psychology, the FOMO, everything starts hitting in, and people might start panic selling off of that. So, Bitcoin's at 21.2. Michael Saylor is saying until 3,500, they don't have to worry about a margin call. And even if that happens, they can collateralize more of their money, which means they can avoid kind of going under or avoid the liquidation of their Bitcoin in order to pay back the debt, because they will have other options to be able to finance the debt. So, I mean, it's an interesting thing that's happening. The question now becomes, does MicroStrategy buy the dip? We know El Salvador is trying to buy the dip at this 21,000. Their average is at 30,000. It's going to be interesting, because if they don't buy the dip, then how long does it take for Bitcoin to get back to 42,000, which is their average, or 30,000, whatever their average is? It's going to take a long time, especially in this economy, for Bitcoin to just jump right back up again. We know Bitcoin's volatile to the upside or to the downside, but it's been to the downside for the entire year now, and over the past 10 days, it's been really to the downside. For that to go to the upside, we know Bitcoin's going to have to be correlated with NASDAQ and growth stocks. And if the S&P is at 3,700 right now, where's the S&P? Yeah, we're at 3,700 or 37.5. Let's go to it real quick. There it is, 37.8. NASDAQ is below 11,000. I mean, we're going to have to see major gains in those company or those indices in order to see Bitcoin correlated with it, because it correlates with the entire market. So ultimately, we're going to see what happens. Let me know what you guys thought about Michael Saylor and his comments on Bitcoin and their margin loan. Do you believe them? Do you think he's buying the dip? Thank you so much for watching. Looking forward to your comments. I'll see you in the next one.